Welcome everyone to Vested Interest. This is Shane and this is our weekly portfolio update video. On this video we are going to cover the $1,477 and some change we added in new capital. We will also go over the reallocated funds. We did finally sell out of our MPW position. They recently dropped the dividend again. I was fine with the first dividend drop. I was actually expecting it. The second one was the, I'll say the straw that broke the camel's back, so to speak. So we did sell out of it and reallocate about $5,221 and some change as well. But for those of you maybe stopping by for the first time, it's not rocket science, in my opinion. The best way to do anything, keep it as simple as possible. So it really boils down to consistently investing, dividend growth investing. That's what we cover on this channel. Buying stocks and growing companies with positive cash flow that covers the dividend and companies with a high return on their invested capital. I utilize both a dollar cost average approach, consistently investing in stocks within the portfolio on a weekly basis, as well as do large purchases if I get a bonus or do a side job or run any extra funds. I cover all my investments into the portfolio on this channel. There is nothing to pay, but if you would like to help out the channel, if you would do me a favor and hit that thumbs up button down below if you find any value in the content, make sure you are subscribed to the channel. It looks like the vast majority of you who watch the channels are actually not subscribed. So go ahead and hit that subscribe button. Make sure you join this journey to financial freedom. Join the Vested Interest community. Hit that notification bell so you're notified whenever we put out any new content. I do these portfolio updates every week. I think it's important for newer investors or investors maybe that haven't started investing yet to see a real portfolio built out over time, to understand you don't have to be, a guru, financial guru. You don't have to have gone to college for this. I'm just a regular person. I didn't go to college for finance. I don't come from a financial background, and my parents are not wealthy. You can do it too. Take a vested interest in your finances and make sure you are investing in your future. That's what this channel is all about. Hopefully to encourage someone out there see a real portfolio built out over time and make them understand that they can do it too. Now let's jump into the video here for the week. We'll look at options first. Options, we did get one play to hit this week. We actually threw out several. We even tried to run a wheel on MPW, but it didn't hit, so we just sold out of that one completely. But the one that did hit, we got this covered call, one contract, BABA covered call here, ticker BABA, out of the consumer discretionary sector with a end date of August 30th, which was Friday. So it did not get called away. It expired worthless. We had an $85 strike price. It expired at the time of expiration on Friday. I think it was around $83 and some change. So we kept the $31.45 after fees. It was 32 cents per share, but after fees, $31.45 did go back into the portfolio. So not as good of a week as we've had the last few, but we still did get one options play, the BABA covered call here. Now we'll get into the sale, right? MPW, I've been talking about it for a little bit since they cut the dividend. I did run a wheel on this, or run some options on this. They were assigned on Friday, last Friday, not this Friday. And then I sold out of the 61 shares that were not part of these covered calls that we sold options on that were called away. So we retrieved $5,221.32 in capital from the sale, from the assignment of the covered call, as well as the sale of the other 61 shares. And the passive income total from the loss here of MPW out of the portfolio now cost us $371.52 in passive income. So we're going to try to make that up with spreading this funds out here over the portfolio, as well as some new additions, but we didn't quite get there. You'll see that here in a minute. Let's just keep rolling here. So this is the MPW reinvested funds. Now there's a couple dollars in here on top of what we saw from the sale, so it's not all reinvested funds. I think $2 and some change there I had to throw in to make this work out, but it's pretty close to all of the MPW funds that we just received from that sale. And we did all of our buying except for the one KHC position here on the 26th, so the same day we sold out of it. And with those funds, the reallocated funds there, we picked up 5 shares of Alphabet, ticker GOOG, and we picked up those 5 shares at $166.74. This is out of the information technology sector. This is more of a growth play with a very small dividend. Hopefully they are going to be growing that dividend aggressively. Very low payout ratio on this one. tech company with nice cash flow, growing free cash flow. So this is one I'm comfortable with for the long term. I just don't know what their dividend growth is going to be like. I am expecting high dividend growth here from this one. They just started paying a dividend here this past year. So hopefully my gamble pays off and this one does have some nice high dividend growth. We did pick up 10 shares of Haverty Furniture Company's ticker HVT out of the consumer discretionary. Picked up those 10 shares at $26.97 per share. I like this one under 27, under 26. Anytime it's in there in that range or lower, I like to add to this position. Picked up 16 more shares of Comcast Corporation, ticker CMCSA, out of the communication sector at $40.36 per share. Vale, this is a mining company out of Brazil, so there are some foreign tax implications around this company. If you hold any foreign companies in your portfolio, make sure you understand the tax implications. Either you're going to have to pay for it at the end of the year, or your brokerage will take it out, and it'll be part of your end of year brokerage statement. You just need to understand which way your brokerage goes on that. So 24 shares of Vale, ticker VALE, out of the material sector. Again, a mining company out of Brazil at $10.61 per share. 16 shares of Pfizer, ticker PFE, out of the healthcare sector. Picked up those 16 shares at $28.98. Nutrien, we added 10 shares to our Nutrien position, ticker NTR. This is out of the material sector. This is also a foreign company. It's a Canadian company here. Picked up those 10 shares at $49.12. CVS, continue to build out the CVS Health Corporation position, ticker CVS, out of the healthcare sector. Picked up those 10 shares at $59.56. Owens Corning, way above my cost basis, but I did want to add a little bit more here, so we picked up 4 more shares. Owens Corning is out of the industrial sector, ticker OC, and picked up those 4 shares at $173.27 per share. Added 1 share of Procter & Gamble, ticker PG, out of the consumer staple sector. Picked up that 1 share at $169.86. Added 1 share to our Union Pacific Corporation position, ticker UMP, another industrial. This is a railroad here. Verizon Communications got a little bit of love with 10 more shares, ticker VZ, out of the communications sector. Picked up those shares at $41.63 per share. And last, on the 27th, we went back in and added the last little bit there from the sale. 4 more shares to our Kraft Heinz position, ticker KHC, out of the consumer discretionary sector at $35.67. So with the reinvestments, these funds spread out over these positions, we picked back up $189.79 of passive income that we lost. We also received some dividends on the 30th from Starbucks, ticker SBUX. This is out of the consumer discretionary sector, paid us $63.43. And we do have the drip set. So anytime a company in the portfolio pays out dividends, automatically goes back in and buys more shares of that same company. So this $63.43 picked up 0.6663 more shares, which added an additional $1.51 in passive income over the next calendar year. Now we get into the new funds, and I should have just combined this with the other slide, but and I don't even know why I did this. I should have just done all my buying on the 27th, but I did pick up 1 share of Haverty Furniture Company, ticker HVT, at $27.05 here on the 27th, added $1.28 in passive income, so that's picking up a little bit of those lost funds as well. And then here is the majority of the buying on the 30th here. We added $1,446.62 to the portfolio, and with those new funds, we added 38 more shares to our Valet position, ticker VALE. This is that mining company out of the material sector. Picked up those shares at $10.54. Comcast Corporation, we added 9 more shares to our Comcast position, ticker CMCSA, out of the communication sector. Picked up those shares at $39.47. Google, we went right back in and picked up 2 more shares of the Alphabet, ticker GOOG, $164.64 per share for that one. And then our weekly buys, and we will be adding to this every week regardless of what the market is, and they have really run up, so it's hard for me to swallow that these are all at their 52-week high, or these 2 ETFs are at their 52-week high, but they are, and we're just going to continue to buy. 1 share of Schwab Strategic Dividend Growth ETF, ticker SCHD, added that 1 share at $84.11. And VTI, Vanguard's Total Stock Market ETF, and it is what it says, the total United States stock market, NYSE stock market there, all the companies in it, a couple thousand, little over a couple thousand companies in there, and we picked up that 1 share at $277.51. added an additional $60.56 in passive income. Total invested $1,477.01 in new capital. We did have the reallocation, and the end result from the sales and the new capital, we actually are in the negative for passive income added. So we're going to be a little bit lower than last week. Hopefully this is the last step back because of MPW. I mentioned this a couple weeks ago whenever they dropped the dividend. I was looking at getting out of this one. So these are the results of purging MPW from the portfolio. We did lose, like I said, $118.38 in passive income. And with the sale out of MPW, it actually shook up our overall sector weights as well. So let's run through those quick. Communications makes up 10.34% of the portfolio. Consumer discretionary sitting at 8.25. Consumer staples at 9.49. Energy makes up 6.01%. Financials makes up 5.70. Healthcare is still the largest position at 14.07. Industrials makes up 6.74. Technology makes up 7.13. We're going to, with the addition of Google, we're looking to build this technology portion out a little bit. Materials makes up 8.91. Utilities at 9.51. REITs and real estate used to be the second largest, but it is no longer. As you can see here, utilities at 9.51% is now the second. And with consumer staples right there at third, and now REITs and real estate is in the fourth position. Actually, I'm sorry. No, I'm wrong. Healthcare is in first. Communications is second at 10.3, and then the rest. Then utilities, then consumer discretionary, so it really did shake up quite a bit. And then still the smallest pie, though it is starting to get the smallest slice of the pie, though it is starting to build out. I wouldn't be surprised if it overtook financials in the next couple of weeks. The ETF portion here, that's those SCHD and BTI positions we add every week. Over here on the right here are the same sector weights breakdown by the percentages that match the pie, but then the dollar amount allocated to each sector as well. And here it is. This is my portfolio, and I do show this transparently every week, whether I'm up, whether I'm down, whether the market's up, whether the market's down, or floating sideways. I show my portfolio every week so you can see what's going on, any buys, any sells, any options that we're running, reallocations like the MPW position, so that you can see a real portfolio built out over time, the ups and downs associated with it. As you can see, we have several positions in the negative, and just because something is in the negative, that's not necessarily a reason to sell. It just might be a buying opportunity because the stock has pulled back and is presenting a buying opportunity. You should understand the companies in your portfolio, what price you're willing to pay for them, and then be periodically looking at them to make sure the fundamentals of the company haven't changed from when you bought into them. It's still growing revenues the way you wanted it to. The margins are still looking the way you want them to. They're not taking any more debt than they should be. They're buying back shares instead of putting more shares in the market. Whatever your criteria it is, you should be checking the positions in your portfolio from time to time, making sure that they meet that criteria still. If they don't, like MPW, for example, I bought it for the high dividend yield. Once they got that second dividend cut, it no longer met the criteria that I set up for it initially when I bought it, and I'm willing to purge it out of the position, out of the portfolio, and add the Google position, and then reallocate those funds. I could have just dumped all of those funds into Google, but I was trying to recoup some of that and get as close as I could back to the original payout. So as you can see here, here's the ticker, all the different positions in the portfolio, how many total shares I own of each, the current price as of the close of business on Friday, market value as of the close of business on Friday, average cost per share right here. This is my average cost per share, my purchase price. This does include reinvested dividends here. Total returns, whether I'm up or down. Obviously, if it's in the red, that means I'm down. With the market really going back up the way it has over the last couple of weeks here, not a lot of positions are in the green or in the red, but there are still some. Comcast we're still adding to, CVS we're still adding to, Google we just added and it goes down. I actually wouldn't mind this pulling all the way back down to its 52-week low, get back down here under 139. HPQ is up, but HVT is back down. If this one's under 27, I like to nibble on it. It's a little higher than I want it right now, but I wouldn't mind it dropping back into 26, 25, 24, even the $23 range. I would add to that one. Johnson & Johnson I don't think is too far out of the range that I wouldn't add there if it dropped back into the 158, 159, maybe even 160 range. Nutrien is one I'd like to nibble on a little bit, and Vale I'm definitely adding there. I think this is a very good company at a very attractive price right now. So I look at the red as buying opportunities. Hopefully you do too. Don't sell a position just because it's in the red. Warren Buffett famously once said, if you can't handle a 50% drop in the stock market, you shouldn't be in the stock market. And if you don't like individual companies and don't want to do the research, stick to ETFs, right? VTI is a good one. VOO is the S&P 500. There's other S&P 500 dividend ETFs out there. Go ahead and find one that suits you and just plug money into an ETF every. VYM is another one similar to SCHD here, a dividend growth ETF. So whatever suits your fancy, you can just find some ETFs that suit you as well and be putting money into the market. And in my opinion, the best way to financial freedom is money in the market and time in the market. But let's keep rolling here. Percent return here, sector that each company falls in, whether they're quarterly, monthly, semi-annual payers here. That's why I've got it broken out there, how they pay. Current dividend yield as of the close of business on Friday. What you see highlighted here means that the companies have already raised their dividends for the year. Yield on cost in this column, portfolio weighting here. So what you saw on the previous slide was each sector weighting. This is each individual's weighting, individual company's weighting. And I do have a rule here. I don't like any one position to be over 10%. I don't like any one sector to be over 20 to 25%. So I do some, balancing or adjusting where I shift money to, allocate money to as far as new buys, which will help offset that as well. I don't necessarily have to sell anything, but I would definitely stop adding to a position if it got to 10%, or a sector if it got to over 20 to 25. Estimated annual income in this column, payout months here, dividend growth year over year, and where a company sits at 15% of a 52-week low. I like to keep my average cost per share under this 15% of 52-week low. It also gives me a high water mark what I'm willing to pay. Not always in line. Sometimes I don't mind going above that. For example, Union Pacific, you saw I add to that position, even though it is significantly higher right now than my share cost at $199. My cost per share is so much under where it sits at 15% of a 52-week low. I can nibble on this one and still be under here. Owens Corning, same thing. I added 4 shares there. As you can see, it brought my cost basis up. I was in the 90s. Now I'm a little over 100, 104.78. But again, 126.44 is 15% of a 52-week low. So I'm still under that. All right, let's run through the total shares here. We have 5,651.262 shares. As you can see, the MPW did drop our total share count down quite a bit, getting out of 1,000 shares. We were over 6,000 shares there combined last week. But again, MPW, even though it wasn't a large position, we had a lot of shares of it. Market value $296,104.49. What I have into the position, and this includes dividends, $263,482.99 here. I am up $32,621.50, but you've seen it where I've been in the negative, and I say the same thing. I don't focus on this. It's nice to be up 12.38%. It's nice to see everything in the green, but it does limit the buying opportunities, I'll be honest with you, with these companies really running up. I've had to go back in and redo discounted cash flow analysis on a lot of these and see which ones I can add to as they run up. Just makes it a little bit more difficult. Current dividend yield, 3.923%. My yield on cost, 4.409%. And this is the reason it's circled in red. This is what I focus on, the estimated annual dividend income, the dividends provided by all the different positions in the portfolio. And we receive them monthly, quarterly, and a couple of semi-annuals as well. Did go back a little bit. Last week we were in the 11,700 range. We are back to $11,616.74. So we did go backwards a little bit. Sometimes you got to take a step back to take a step forward. So I do like the Google position that we added. Again, we're going to be building this one out over the next month. If you didn't catch my stocks, to the 4 stocks I'm going to buy in September video, go ahead and check that one out. Google is on the list, so I will be adding to this position here over the next month at least. Probably over the next several, as long as it stays in the 160 range or lower. Like I said, I'd love it to pull back down and drop down in the 130s, 120s, even lower than that. Dividend growth sitting at 6% there. We did go in and adjust this a little bit. Some of the companies, as they've increased their dividend this year, it did adjust their dividend growth year over year. So we did go in recently and adjust this. Lost a little bit there. We also lost a little bit of yield on cost when we dropped out of MPW. Again, that's the nature of rebalancing at times. So that's what it is. Let me know what you added to your portfolio this week. Would love to hear from you. And as always, appreciate you stopping by. If you haven't done so already, don't forget to show me some love. Hit that thumbs up, ring the notification bell. Most importantly, subscribe to the channel. Join us on this journey to financial freedom. Join the vested interest community. Hit that subscribe button. I do personally read and respond to the comments. I am always interested to read your questions, opinions, or suggestions for future topics. Again, we do the Stock Pick of the Day series Monday through Thursday. So if you have a company you'd like me to cover in that series, drop it down below. Work it in the rotation. And just another reason to hit that notification bell so you're notified whenever we put out any new content, and don't miss these portfolio updates we do every Sunday as well. Well, this is Shane signing off, wishing peace and prosperity to you and yours. And remember, financial security comes to those who take a vested interest. Hey, thanks for stopping by. Thanks for tuning in. Hope you have a great holiday weekend. I am off on Monday. The market is not open on Monday. I will probably put out the dividends and options video, a little recap on the month of August for Monday. So tune back in for that one. Another reason to click that notification bell. Make sure you subscribe to the channel. Really do appreciate all of you. And a special thank you to the subscribers. You guys are awesome. The channel continues to grow because of people like you. And I'm not a financial advisor. Nothing in this presentation should be considered financial advice. I'm only sharing my opinion and investing journey for educational and entertainment purposes. Investing involves risk. You can lose money. You should never invest any amount you're not comfortable losing. Always do your own research. Invest based on your situation, circumstances, and select criteria, or seek the advice and counsel of a certified financial advisor.